Welcome back to Tesla Shorts Time Daily, episode 430, coming to you from Vancouver. It's April 8th, 2026. Let's dive into today's Tesla news. The numbers coming out of Europe right now are genuinely impressive. Tesla's registrations in Germany more than quadrupled last month compared to the same period a year ago, according to official data from the German Federal Motor Transport Authority. That kind of jump isn't just noise, it signals that after a softer stretch, momentum is clearly returning in one of Tesla's most important markets. Product refreshes, better availability, and what looks like improving consumer sentiment all seem to have lined up at the same time. From a business perspective, this regional rebound matters a lot because Europe has been a bit of a puzzle the last couple of quarters. A strong performance there can quickly take some of the pressure off global delivery targets when North America or China faces headwinds. It also reminds us that Tesla's story isn't one single smooth upward line. There are these regional cycles, and when they swing back positive, it tends to lift the whole picture. The fact that this surge happened even as quarterly delivery numbers have looked relatively flat in some recent periods puts those shorter-term wiggles into better context. It shows that Tesla's long-term scale, its product mix, and its ability to recover in key markets can still deliver an edge when it counts. This milestone, combined with the company now having surpassed 9 million lifetime vehicle deliveries and reclaiming the #1 spot as the global battery electric vehicle seller in the first quarter of 2026 ahead of BYD, reinforces Tesla's central place in the electrified vehicle conversation. It suggests the foundation is still very much intact, even if the ride sometimes gets bumpy. That European strength feels like a good bridge into what owners are actually experiencing on the ground, because no matter how strong the registration numbers look, the real-world ownership experience ultimately decides whether people stick with the brand or start looking elsewhere. A detailed 6-month review of the Model Y just dropped from an owner who's been living with the car every day, and it's one of those refreshingly balanced takes that cuts through a lot of the noise. On the positive side, they're genuinely impressed with the ride quality, how planted and composed it feels even on imperfect roads, the intuitive tech interface that still feels years ahead of most competitors, and the efficiency numbers that keep beating their own expectations in mixed driving. Those are the things that make you smile every time you get behind the wheel. At the same time, the reviewer doesn't pull punches on the frustrations. Certain software behaviors that feel inconsistent from drive to drive, some of the cabin materials that don't quite match the premium price point, and a few user interface quirks that still haven't been smoothed out after multiple updates. Reading something like this is valuable because it gives prospective buyers a realistic window into day-to-day life with the vehicle, rather than just the polished spec sheet or the carefully edited YouTube review. As competition heats up in this segment, these lived experiences often carry more weight than straight horsepower or range numbers. They shape purchasing decisions in ways that matter most to customers who will actually be spending hours in the car every week. It also gives Tesla a pretty clear roadmap of where the product team should keep focusing their energy, because the gap between really good and can't imagine going back is still there on a few fronts. While owners are weighing those pros and cons in their reviews, Tesla has been doing some important behind-the-scenes work on the safety side that doesn't always make the headlines, but could matter just as much for long-term acceptance. The company recently held dedicated training sessions with first responders across Southeast Texas, focusing on the practical realities of handling high-voltage battery fires and electric vehicle extrication techniques. This isn't generic EV training, it's model-specific knowledge that differs markedly from what crews have learned over decades dealing with gasoline and diesel vehicles. Things like where the cut loops are, how the high-voltage systems behave in a crash, and the unique considerations around battery thermal events. As electric vehicle adoption keeps growing, this kind of program fills an important knowledge gap that many departments are still figuring out on the fly. It improves real-world safety outcomes and shows Tesla taking responsibility for the full life cycle of its products, not just the exciting parts that happen before delivery. Building this confidence among emergency services can only help broader acceptance of electric vehicles. When firefighters and paramedics feel prepared rather than uncertain, that reassurance trickles down to regular buyers who might have heard exaggerated stories about EV fires. It's the kind of quiet, responsible work that doesn't move the stock, but steadily removes friction from the transition. Speaking of removing friction, the charging network just got a practical boost in a spot where it can actually make daily life easier for a lot of people. Local authorities in Danbury, Connecticut have approved a new Tesla supercharger station that will be located at a busy shopping plaza on Newtown Road. The site sits right in a high-traffic retail area, which is smart placement because it turns charging into something you can do while running errands rather than a separate chore. For long-distance travelers, it adds another reliable point on the map through the Northeast Corridor, but even for local owners, it lowers the barrier to owning an EV because there's convenient, fast charging nearby when you need it. Better placed infrastructure like this reduces range anxiety in a very tangible way, especially in regions where public charging has historically been patchy. It also supports broader electric vehicle adoption that goes beyond Tesla's own ecosystem. Once those stalls are live, other EV drivers will benefit too, assuming the plugs remain open. Easier charging helps strengthen the entire ownership case, which feels particularly relevant right now because competitors are clearly trying to pull customers away on price alone. Polestar, for example, is offering discounts of up to $21,000 on its models in the United States. That's an increase from the incentives they were providing last year, and it's clearly aimed at tempting Tesla owners, or at least Tesla considerers, to switch brands. The Swedish maker is doing this even without the previous $7,500 federal tax credit, which makes the aggression even more notable. It marks one of the more direct competitive shots we've seen in the premium electric vehicle segment in quite some time. This raises interesting questions about how sticky Tesla's ecosystem really is when price becomes the main variable in the decision. For some buyers, the combination of supercharger access, over-the-air updates, and the overall software experience might be worth paying more for. For others, especially in a tougher economic environment, $21,000 is $21,000. The move could force Tesla to evaluate its own pricing strategy or lean even harder into the advantages that aren't easily copied. The charging network density, the data advantage, and the continuous software improvements that keep the car feeling newer over time. It's a reminder that the competitive landscape is getting sharper, and not everyone is playing the same game. While Polestar is coming after the higher end of the market, Ford is aiming more directly at the heart of Tesla's current lineup. The company has confirmed it's developing more affordable electric vehicles positioned squarely against the Model 3 and Model Y. At the same time, Ford is also working on a sub-$45,000 electric ute aimed at markets like Australia, where that body style has real cultural pull. These moves show traditional automakers accelerating their efforts on both price and practical body styles that buyers actually want in different regions. Increased choice and lower price points could expand the overall electric vehicle market, which in theory should be good for everyone. At the same time, they will likely put downward pressure on Tesla's volume leadership in certain segments, especially if those new offerings land with competitive range and features. It feels like we're entering a phase where the pie is still growing, but the slices are being fought over more intensely. Price battles matter, of course, but so does the actual cost of driving once you own the vehicle. One owner recently ran a detailed real-world comparison between their Tesla and a gasoline-powered Mini, and the numbers are exactly what you'd hope to see if you're trying to make the switch. The breakdown shows significantly lower energy costs per kilometer for the electric vehicle, and this holds true even when you factor in both home charging at favorable overnight rates and the occasional public charging session across different driving patterns and seasons. They tracked everything: highway trips, city commuting, cold weather performance, the works. This kind of transparent data helps demystify the total cost of ownership conversation for those who are still sitting on the fence, especially people who keep hearing conflicting stories about whether EVs actually save money. It makes the dollars and cents case clearer and can accelerate consideration for an electric vehicle in a way that abstract range numbers or acceleration specs sometimes can't. Lower running costs are genuinely one of the strongest quiet advantages, even if they don't generate the same headlines as autonomy updates. And of course, the bigger conversation right now, at least in enthusiast circles, is still autonomy. Tesla has begun rolling out full self-driving version 14.3 to early access program users, and the initial reports are encouraging. Early testers are noting measurable improvements in smoothness, the way the car handles complex intersections, and a noticeable reduction in phantom braking compared with the prior release. That kind of progress feels meaningful when you're living with the system every day. The update demonstrates that incremental gains continue even as the regulatory and engineering challenges remain substantial. In response to a video of the system successfully avoiding an accident, Elon Musk highlighted just how much difficulty still lies ahead. He pointed to the massive volume of edge cases that must be solved for true reliability across all conditions. These rare scenarios are hard to predict and often require thousands of real-world examples before the system can handle them consistently without hesitation. Musk's comment offers a candid reality check that tempers some of the more breathless expectations you see online. It reminds everyone that meaningful autonomy improvements tend to arrive in small, hard-won steps, rather than sudden leaps. That honest view of how difficult real autonomy actually is feels like the right place to take a step back and think about some of the deeper economic questions in electrification. Because when you zoom out from the daily software updates and competitive pricing moves, it's worth asking what actually determines whether battery electric heavy trucks become economically superior to diesel for most freight routes. The surprising truth, when you dig into the real-world data, is that the break-even point depends far more on annual mileage, electricity prices, and duty cycle than on battery cost alone. A truck running 120,000 miles per year at 12 cents per kilowatt hour can recover the battery premium in under 2 years. But a truck doing half that mileage may never reach break-even no matter how cheap the battery becomes. Many analysts still fixate almost exclusively on upfront battery price, yet the operating variables matter more across the full service life of the vehicle. The fundamental question becomes, at what exact combination of mileage, electricity rates, and usage patterns does an electric semi actually become cheaper to run than its diesel counterpart? Tesla's approach with the semi seems built around optimizing for those high utilization duty cycles where the economics line up fastest. It's a reminder that different parts of the transportation puzzle will electrify at different speeds, and the winners will be the ones who understand the operational realities rather than just chasing the flashiest technology. Now, one thing worth watching closely in the near term is the current inventory situation. Tesla is currently sitting on roughly 50,000 unsold vehicles as production continues to outpace near-term demand in several markets. This buildup ties up capital and raises the risk of deeper price cuts or incentives that could put pressure on margins at a time when Wall Street is already watching closely. The challenge is genuine, given some softening demand signals and rising competition from players like Ford and Polestar that we talked about earlier. That said, Tesla's flexible manufacturing lines and its ability to deploy targeted software updates give the company tools that legacy automakers simply don't have to help stimulate demand. How management handles this inventory over the coming quarters will reveal a lot about its future pricing power and operational discipline. It's a real test that deserves careful attention rather than being dismissed as just a temporary blip. Before we go, it'll be interesting to see tomorrow how the European momentum and those first quarter battery electric vehicle leadership numbers influence any updates from Tesla on delivery guidance. The pieces are moving in interesting directions right now. That's your Tesla news for today. TSLA closed at $346.65, down $15, 4.1%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow. This podcast is curated by Patrick, but generated using AI voice synthesis of my voice using ElevenLabs. The primary reason to do this is I unfortunately don't have the time to be consistent with generating all the content and wanted to focus on creating consistent and regular episodes for all the themes that I enjoy, and I hope others do as well.